welcome once again to the Dukascopy TV studio. I'm Ben Jones. Back alongside me after a short break from the studio is Bruno Estier. Bruno, once again, it's a pleasure having you with us.
Good morning, Ben.
So, last month the volatility index VIX was near 11%. Did nothing happen in terms of the US equity markets in August?
Well, of course, something did happen during the summer. As we can see here on this chart of the VIX, it has been rising from 11% to 17.50%. But what is interesting is to notice that this level is still below the previous one of 19 and 21%. So the decline we've got in the last 3 weeks is coming to a level of 11.50%, and that's a key level.
Okay, now why do we need to be careful?
Well, let's step back, and if we take a historical chart of VIX, we notice that this 11.50 level is in fact a historically low level from which usually there are very sharp rises. And we had already rises which could be the situation actually could be very similar to the one of 2006, 2007. So there is a risk that this scare of August could be just the prelude for another ones during the sensitive period of September, October.
Okay, and what does this mean for the S&P?
Of course, what it means for the S&P, if we take a setback since the beginning of 2013, we noticed here on the chart of the S&P that we have nice uptrend. That means higher highs and higher lows in progression. And recently, in the right side of the chart, what we noticed is that we are just making a new highs around 2000 on the S&P 500. Now, this sounds bullish, but we need to think in terms of scenarios what could happen early September. If in early September the S&P move back below the 2000, something will happen on the momentum indicator here on the lower part of the panel. That means that we are going to make a lower highs on the momentum compared to higher highs on the price. And that means, so-called technical terms, that means this is a bearish divergence developing, which usually calls for a correction coming. So this correction then could take the previous low of 1904 and eventually, if it's a very intense correction, go all the way to the 1700.
Okay, now what else could be a warning signal within the US market?
Well, we had already spoken about that, and it's still the case. We need to look at small cap, mid cap relative to the large cap, which is represented by the S&P 500. So here we have the very small cap, Russell 2000 on the top part of the panel, the mid cap are on the lower part of the panel, and these dotted line are the relative strengths relative to the S&P 500. And we noticed that, of course, since April for the small cap, the relative strength has been moving down. That means that small cap and mid cap underperform the large cap. So here now on the mid cap, if we are failing in September to make a new high and start again to move down, that could be a bad sign.
Okay, and finally, could the European markets also be a warning signal?
The European market has been the weakest so far in the last quarter. As we noticed here, the correction has been more important than on the S&P because we almost rejoined the beginning of the year lows, and the relative strength has been moving down. Therefore, what we should be looking for in the coming days and weeks is a failure of this rebound of the relative strength to be sustained and the downtrend of the relative strength to resume. That would be a bad sign, as well as if we look at emerging market, we notice that it looks like good news because you are making a new highs, but if we do not sustain these new highs, there are a similar situation as the bearish divergence on the S&P, and we also would have this bearish divergence activated with price moving just back into the range. So 2000 on the S&P 500 is not really a time to be complacent, but really to look carefully at the evolution of the chart in the coming days and weeks.
Fantastic. Bruno, once again, thank you very much for joining us.
You're welcome.
And thank you for watching. Do make sure you keep clicking back to Dukascopic TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.